This is our Forex blog for September 13th, 2013. And these are our currency indexes, which let you see visually what each currency's trend is. Is it going down, up? You can see the breakouts here in the yen. You can see the hourly moving average. Above that is more likely to go up. Below it, more likely to go down. When it hits a resistance area, it's likely to reverse. If it hits that area and breaks through, it's likely to go up. And of course, our containment bands are very likely to lead to a reversal. The euro is down too far and likely to reverse up. Dollar is down too much, likely to reverse up. Yen's up too much, likely to reverse down. Same thing here with the pound. And these are some of the easier ways of trading. You want to simply buy the strong currencies like the pound versus the weak one, the yen and the dollar. It's really that simple. So a lot of traders really just want to see how our signals work because rather than spend 6 months to 3 years learning all that in the past has been necessary to trade successfully, now you can just bring up our currency index. If you see the euro is weak and the dollar strong, then you could just simply take sell signals, as you can see. Basically, you want to use these signals and use a trailing stop. Starting today, you can see this trade here worked, this one failed, this one worked, this one failed. Sorry, that one failed. This one here was a little bit early. This one here might have been a break-even small win. This one here worked. 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 This one here led to at least a chance to get out with 3 or 4 pip loss. So, you know, that one's a loser. But you can see the vast majority of the moves that it catches made up for, you know, the small losses. There's a win, tiny loss. You know, probably a small win, tiny loss. This one's a tiny loss. Tiny loss. Big win, big win, big win. You know, you're never going to catch every pip, just assuming you catch part of it. And you can see this one here. Most of the wins are significantly bigger than the losses, and they're all, you know, most days there's bigger wins than losses. You know, the wins tend to be 10 to 20 pips, and most of the time, in my experience, if the signals don't go your way pretty quickly, then it's not going to work. So you should get the hell out, take a small 3 to 8 pip loss, and try to get in again, and hopefully that's one of the 20 or 30 pip wins. So here's how you use this. You can see clearly that the euro is down today, for instance. It broke from above to below its point of control. That's where most traders have positions in all the euro pairs yesterday. Hourly moving average is right here. It's kind of superimposed right on that level because it's been going sideways in the middle, you know, in the range. You can clearly see, and now that we have these built into the software, you can put trend lines on here, and you see a tight little range like that. You could just set an alert and have it play an audio file, send you an email, send you a text message on your phone, and you know, when it breaks, boom, right here, 9 o'clock, it's likely to go down. Clearly the pound's up, but unfortunately it's up near the upper containment band. It could continue up. I would trade this against the yen, which is kind of going sideways, and it just recently broke from below to above its hourly moving average, so it's likely to go up. This one's very likely to go down. Bring up a euro-yen chart, and you can see at 9 o'clock it's very likely to have gone down. And you can use any time frame you want. I'm just using a 5-minute for illustrative purposes. At 9 o'clock you saw that it's likely to go down, and it didn't break the low of the day for another 15 minutes. So you had 15 minutes to prepare for this sell, and you can see it fell from around 132.30 all the way down to 70. It's a 60 pip drop, and that's why I prefer to use the currency indexes to identify the pairs, and then I'll use the signals to actually take trades. For instance, the pound, you know, clearly going up today. The dollar's weak, you know, because the currency index was clearly showing the pound as very strong today and the dollar is weak. I would bring up a pound dollar chart and basically just focus on the buy signal right here, which was a good trade that went up 25-30 pips. And if you want, you can put on our containment bands, and if it's outside of those bands, you can certainly take our counter trend signals. pretty much one of many. There's about 20 different counter trend patterns that are in this software now. And so if you put the counter trend containment bands on here, usually when it gets outside these bands, especially when it's 5, 10, 25 pips above it, these tend to be pretty accurate counter trends triggers. So, you know, you can certainly go short here and make 10 or 20. You would want to buy here, make 10 or 20, short here, make 10 or 20, short here, you'd have a small loss, short here, you'd have a small win. But you get the point. Some of our signals are trend, some are counter trend. Usually when they're outside of the outer containment bands, they are counter trend signals, obviously. But sometimes there's support resistance, and whenever support resistance are outside of our containment bands, it's very, very high probability place to, you know, get in and out of a trade. And the more you learn, the better you're going to do. For instance, one of the reasons that we bought this pullback is, if we put the previous day's high and low on the chart, the market broke out in the pound dollar. The pound dollar went above yesterday's highest high of the day, and then when it pulled back, it found support at this previous resistance area. Anytime a resistance area gets broken, it tends to become support, and anytime a move goes beyond the 2.0 band, I'm always looking to buy a pullback. But I don't want to get in too soon. I don't want to get in when it's above the outer containment band. So I'm not buying it right here, which is, you know, many of the pullback methods we have, if it was inside the range, would be looking to buy right here. I need a deeper pullback because it had gone up too much. And a lot of times markets that go up too much also fall too much. The volatility is higher. So I need a deeper pullback, and that's one of the reasons why I waited so long to buy it. And if I was, you know, a trader, I'd be also looking to buy here. Our system didn't catch that one. I would have also bought here. Our system didn't catch that one. But you know, with close to 80 different patterns in here, there's a slew of them that I see each day that I know, based on trading for close to 12 years now, not always using range charts, but just how the markets operate. You know, pullbacks and sideways breakouts have been the two methods that I've traded. You know, sideways breakout would be a little rectangle pattern where it goes sideways from, my preferred time frame is an hour and a half to 2 hours sideways. You can see from around 3 to 8, 5 hours sideways breakout, very high probability. And also when it makes a higher high, buying a pullback. This one would have counted if and only if it was underneath, you know, maybe the 1.5 band. So if it had gone up here and had a little pullback, I would have bought that. But up here, don't want to buy. Even though it worked, it's a low odds trade. As you can see right here, that one went up, came right back down. And since I'm running these myself on automated while I'm sleeping, I don't want to take low odds trades. So I take the same patterns I use for automated trading, put in the software so our traders, especially new traders that have no idea what they're doing, can know when to buy and sell. And if you combine that with what I consider to be a very easy to use currency index, if a currency is weak and another one's strong, you want to sell the weak versus the strong. For instance, you see the euro's weak and the pound's strong. Guess what? The euro pound is very likely to go down, and there's going to be plenty of opportunities to get into this trade. For instance, it went down. Here's your first pullback. The first pullback's always my favorite. You have a nice little flag pattern right here, and those are the two highest probability trades. You know, the farther down it goes, the more likely it is to make a deeper pullback. More likely it is also to work its way up, at least at the minimum, to a 38% retracement. So I'm using fibs in our systems, and when the market makes too big of a move, I really wait for this area, you know, between this area and the 62% fib to look for sell patterns. And so, you know, it would be basically looking for a sell right here that might have made a little bit right here and here, both of them, you know, having made money. If you had gone short right here, it didn't work because it didn't retrace back up enough because the move down was too much for this particular currency. It's all based, every part of our analysis is based on each currency's statistical volatility, and it's adaptive for each pair.